Hey y'all, Zach McDonald, your real estate agent with Real Property Associates. And today we're gonna talk a little bit about mortgage rates. Again, I don't talk about them all the time because I'm not a loan officer. I help people buy and sell houses in the Seattle area. But I think it's important to talk about the Freddie Mac primary market survey here. And every week, Freddie Mac publishes an average for the mortgage rates for 30 years, for the 15-year, and for the ARM. And today we're gonna talk about the 30-year fixed rate because it just fell below 3% again. And I think this is a good opportunity for people if you haven't refinanced yet and gotten a lower rate. So if you still have like a 4.5% interest rate, or even if it's close to 4% or above, I think it makes sense for you to consider refinancing. Now, I did this last year and I refinanced into a 3.25% rate, which was at the time a record low. I was really excited about it. And then rates dropped off. So last year, the second half of 2020, we saw mortgage rates below 3% and they got down to 2.65%. And that was at the beginning of January, actually. And then we've seen them climbing this year. So back in April, we saw rates jump up to 3.18%, I believe it was, on average, which is still super, super low and still lower than what my interest rate is, that I'm super happy about, by the way. But rates have dropped below 3% again. So I think this is going to be one of those opportunities for you to cash in if you haven't yet. It's still great to be a buyer right now as well, which is why I think we're still continuing to see the multiple offers and people paying way above asking price because they can. And what happens is when rates go up, people have less buying power. They're not able to buy that new house that they want, and they're also not able to compete on the price. Now, again, everybody's impacted by that. So if one person's able to pay more, so is everybody else. So that's also been part of why home prices have been going up, because people are competing and they're able to pay more. Many people I've been speaking with about mortgage rates think we're going to see rates climb into the mid to upper threes, maybe even get into the fours by the end of the year. So this is your chance. Again, we don't know what's going to happen in the future, but this is your chance, at least historically, to cash in on a super, super low rate. So number one, if you own a house and you have a mortgage rate that's in the upper threes or even above that, into the fours, fives, that would be crazy. It's, I think, a great time for you to lower your payment. You could save a considerable amount of money in interest every month, and over the long haul, that's a lot of money that you could save. If you're somebody who's thinking about buying right now, and you're considering, I'm kind of barely on the cusp of purchasing right now anyway, what happens if interest rates go up? Are you gonna be able to afford to purchase? So I think affordability is going to be impacted later in the year and into 2022. Rates are not going to stay this low forever. They've never been this low before, and I just can't foresee a situation where interest rates stay below 3% forever. So this is an opportunity to buy with the lower rate. If you're paying cash, you're probably sitting on the sidelines right now thinking, man, I don't know if I want to pay these prices for a house. I'd love for the prices to come down a little bit. But if you're buying with a loan, you're thinking, man, I don't want to have a 5% interest rate on my money because it's going to cost me a lot of money over the long haul. So refinance and purchase, it's still a great time to capitalize on these interest rates. If you have questions or want to talk about your situation and you're in the Seattle area, I'd love to be a resource for you, and you can reach me at one of the methods down below here in the video.